okay.
No.
I get so awkward at the beginning of our conversation. So it's like we need to think of funny stories.
No, we don't. We just need to not always talk about finance, you know. I have got a giant gash on my toe right now. And honestly, do you know what I was thinking on my way here? Because I did have to take the plaster off because it was so ugly. Oh, God.
Oh, my God, sorry. I just was hoping she'd sit next to me, but she love me.
We've got an untrained dog in the studio.
Do you know? Okay, I went to Laneways for a hot minute and I left about half an hour. But I'm staying at my sister's and anyway, the lady was looking after the kids. She took Miso for a walk with the kids and I was like, oh, amazing. And she was like, she was the most well-behaved dog.
No, she's trying to kiss your ass. There's no way
she was like, oh my goodness.
Me.
And then went away for the weekend with this other dog and the dog was jumping up on the table eating all the food and Miso was just sitting there and I was like, thank goodness.
All right, well, let's test it. If you don't pat her, does she bark? Because she will. You give it 5 minutes and she'll be like,
I'm sorry she wants love.
Yeah, I know, but she could just sit in the corner and be good for an hour, you know. Miso, down.
She hasn't seen you.
Do you think she just lets me?
Feel bad.
Because like a sister, she knows how to press the good and the bad buttons.
The good and the bad.
No, but back to my toe.
It looks lovely.
So I was trying to. Oh, there we go. It wasn't even 30 seconds in and she's already growling. I had a lovely family weekend. And anyway, we were leaving the house and I was vacuuming, trying to get it ready for a friend had basically lent it to us. So it was like you wanted to leave it spick and span when you left. And
oh, bless, I can just imagine you going, I'll do the vacuuming.
I was running around like I was really sweaty and I had my hair on my face and I was like, I'll do the vacuuming. Anyway, I was trying to get the end of the vacuum onto the stick thing. And I missed it and I stabbed my toe. Now I've got this like toe that won't stop bleeding, but I also don't want to put a giant bandage on it because I
do find sometimes plasters are bad.
Worse?
Yeah. Just let it heal.
And then I was trying to carry a chili bin like 2 hours later and the whole thing like got caught on the back of my other heel. So I've just I'm in the wars at the moment.
And I've been in the wars too.
Oh, poor Wiki had an operation.
We're just talking off mic how Soph has probably told more people that I've had surgery than I have. She's used it as an excuse for us not getting work back to people or like lack of email response. Like, sorry, we've had surgery.
I literally spoke to someone this afternoon and I was meant to get something to them tomorrow and I was like, I'm so sorry, Vic's like a little bit delayed. I fully threw you under the bus and I was like, she's not feeling that well. And I thought, imagine if this client saw you out like at a yoga class or something and they were like, oh, how have you been? You're like, I'm fine.
But
but you actually have been out, down and out.
Down and out, yeah. No, I've been trying to relax. I just, yeah. I'm fine, minor surgery, not life-threatening or anything.
We're not allowed to talk about what kind of surgery it is.
I'm like, no, I draw the line. I'm very open on this podcast. But no, I actually like wrote down, like I just was lying there. It was quite funny when you come out of general anesthetic and you're a bit, woo.
Wait, so you were fully under?
Yeah.
Asleep?
Yeah.
And you went for a casual walk with friends the day after?
Yeah, I was kind of fine. But I think just like bloated and stuff and feeling a bit gross the last couple of days because the general anesthetic like has to go through you. But I think, the next day I was just kind of probably a bit still.
You sent some weird emails, like some of them didn't make sense and I was like, funny.
Oh, it's funny you come out of surgery and they're like, no, we're happy to give you your phone but no social media.
Really?
And I was like, oh my God, people must go on there and accidentally post
go live or something?
Yeah. And
really? They gave you social media tips?
And I called Flowerman and I was like having a good old chat.
This is Vic's boyfriend for anyone that is like, what the hell does that mean?
And
he sent her flowers on the podcast once. It was quite cute.
Yeah. Anyway, and then I was like, I don't think I'm going to. And not have to wait in a public system.
Get off your bum and have
get back to it. Yeah, I was like, thank goodness I have insurance.
Yeah.
And that was my curve-related thought while I was lying in bed high as F.
Yeah. No, I think it's true.
Yeah.
I Yeah. I'm not going to don't go into my insurance. But I will say, like,
but you've got it now.
Yeah, no, I do. But with medical insurance, like, I do think sometimes when that comes out, because it's quite a large amount, it's like, whoa. For me, I think it's about $150 a month or something, which honestly is quite a lot, especially when you're not claiming very often. And I think the thing is, you know how they send you those giant documents and there's like 50,000 pages of like, this is what you can claim, like as if anyone's reading that. So I find I often will go to a specialist appointment or go to whatever, and then I just don't claim back because the admin side of things, I'm just like, oh, like I have it there, but I don't think I'm utilising it. This is a Sophie problem, not a Curve problem.
No, I'm just like that. Wow, yeah.
Like I had to use it for those appointments that I had, those specialist appointments like a few months ago, and I probably spent about $1,500. And my bank account's looking dire at the moment, but I still haven't reimbursed myself or like contacted Southern Cross to be like, yo, these were my appointments.
Because when my bank account is looking dire, I sit there and I go, what can I get?
I know, because you do it with the business account too. She's like, hi, have you sent this invoice? Hi, has this invoice been sent?
But I look around, I'm like, oh, do I need those shoes? Could I sell them? Oh,
do you actually?
I honestly, I'll be like, and then I think, oh, yes, I could get reimbursed for that special appointment.
God,
or I think back and to what I could get money off, and I could sell stuff and
because I think your mentality is always, how can I make more money? My mentality is, how can I save money?
Or how can I spend less?
Yeah.
I mean, I do think like that as well, but it's more when I am dire, I'm like, does anyone owe me money? And I'm like, hi, I remember 3 years ago when you borrowed. No, but yes, it was actually quite interesting. When I was talking to the anaesthetist.
The what?
The anaesthetist. He's the guy that...
Yeah, I know what it is, but you didn't say that word right.
I tried to skip over that. Tried to make that like you didn't know.
Anaesthetist.
Anaesthetist. Yeah. Anaesthetist. Anyway, and he was like, what do you do? And I was like,
what does he look like? Does he have a gap between his teeth?
I can't remember.
Quite cute.
No.
Oh, okay.
Yeah. Anyway, he was like, what do you do? And I said, I've got my own financial education platform. We teach women about money and investing. It's called The Curve. And he's like, I need to get my 2 daughters to listen. And I was like, yes, you should. And he's like, they're just like, Dad, you need to work more. And like he tries to get them interested in like investing and saving. And he's just like, they're terrible at spending. They spend too much. He's like, and they just keep telling me that I need to work more to fund it. And I was just like, I don't know. Whoa. It was just quite interesting. I was like, that's not really what we do. We're more about educating women to empower themselves.
Not like sniff out a gold digging scenario.
Yeah, it was just kind of like, I was like, I really should have, maybe it's on me to explain better what
Were you high at this point? Like,
no, this was pretty high. Oh, okay. Yeah, this was low.
Maybe you need to work on the elevator pitch.
Yeah, I think that's a bit on me. Yeah. Yes, must work on the elevator pitch. Must take business cards everywhere.
No, business cards are done. I think QR codes is what we could have on the background of our phone.
Yes, yeah.
So today we are going to be talking about mortgages, kind of, and
yes,
because one of the questions we get sent in a lot, like whether it's email, social media, bumping into someone on the street, is like, okay, if I have money, should I be putting that towards a mortgage or should I maybe put that into stocks or elsewhere?
Yes.
And I think it's kind of what's hard to get your head around is the idea of like interest rates versus return versus like it's quite hard to prioritize.
Yeah. Yeah. And I also just think back in the day when you maybe had a bit more disposable income, mortgage rates were lower. It was like, okay, I've got a bit of spare cash. I'll pay off my mortgage, then I'll invest or something like that. Whereas now it's like, I don't actually have the option. I need to choose one or the other. I don't have the luxury of having the choice to put money into both investments and mortgage. So I need to choose one or the other. It's like, what should I choose? So I think...
It's even like for me with my student loan, like I've still got about $8,000 on my student loan.
Yeah.
And before we go back over to London, I've got to be like, what's worth it from a... Like what makes more sense for me to keep that in the bank, for me to put that towards property or stocks or just get rid of that debt based on whatever that interest is I'll accrue by going overseas. And it is sometimes a bit like, oh God.
Yeah. And especially because mortgage rates have increased as well, interest rates have increased. And there's a lot of chatter about mortgage rates.
Yeah.
And there's a lot in the headlines. And everyone's like, oh gosh, am I doing the right thing? And you probably talk to friends and they'll be doing something different. And it is, and I hate saying this because it seems like such a cop-out.
Oh, it's up to you and your personal situation.
It is, because investing is so personal. Money is so personal.
I know,
Finance is personal. Everyone's situation is different. So I can't be like,
people will be tuning off. Okay, no, hold
every
on.
single person has to pay off their mortgage first because,
I know, but I think there's got to be some kind of, not rule or like recipe that you can follow where it's like, okay, oh my God, she's smiling so smugly.
Well, I'm glad I
have
prepared for this podcast. So, yes. So actually the majority of our audience, 60% of listeners own their own home or have a mortgage, which is quite amazing. Wild. No. We're not allowed to say that word anymore.
Yeah. I told her off for using the same adjective over
Which
and
is
again.
quite surprising.
It is actually kind of shit, to be honest, to be on the 40%, I must say, because I'm a non-homeowner and I'm in the minority, which is quite surprising,
I don't
honestly.
think that's shit though.
I don't know. I want to be able to buy a house.
Yeah.
And I haven't been able to yet. And honestly, today I even had a meeting with a mortgage broker.
Oh my God.
I know. But the problem is I find even just like submitting the forms hard. You know, I've avoided opening up the form situation for months. They're like, hi, Sophie, just checking in to see how you're going. And I'm like,
it's so overwhelming. It is. I felt like I grew up about 10 years in 10 weeks.
Yeah, I don't know. It's like it feels like a part-time job applying for a loan. It's not, but I just think when you've never done something before.
Yeah.
Anyway, the point is, what I was trying to say is that it's something I would like to do.
Yes.
And I feel like I've dabbled in stocks and I've got my KiwiSaver to a point where I could buy property. So,
But doesn't it excite you then to like be like, oh gosh, this is such an unknown world that...
I'd be like, if you said to me, hey, Soph, cool, this is what you need to do. This is the house that you're going to buy. I honestly would be like, brilliant. Help me do it. I'll do it now. Like I'm not like, oh my God, that's so exciting. Look at what's available in Mangere Bridge. Like I'm not excited by looking at houses or buying, because I don't even really want to own the house so I can go and hang out in it. I just want to own it so that I can have an investment. Yeah. Is that bad?
No, I think it's just... It's going to be the biggest purchase you'll probably ever make. So I think you should be a bit excited or a bit interested in what you're actually going to be in debt in.
Yeah.
Do you know what I mean?
I shouldn't be buying a house. I think the thing is, because you can leverage with property, which I'm sure we'll go into more detail soon. And if you haven't actually listened to our podcast, which is the one that we spoke about leverage, I might just quickly look in case, because we went into a big deep dive on this. But it's basically the idea that in order to buy a house, you don't need to front up the full amount. So if you're buying $1 million property, you don't need $1 million deposit. That's not how it works.
No.
And so by being able to borrow money from the bank, it means that the return that you're getting is also on the money you've borrowed as well as the money you have. So even though the returns aren't, it's not like it's hugely different to invest in stocks or property, because you're able to leverage and have a bigger amount that you're earning money on, it therefore means that your return can be greater. And you can't leverage really on anything else, can you? Like if I wanted to leverage on...
Well, that's kind of like taking a loan for a business.
Right.
Is the same as that. You can actually borrow money and invest in stocks, but that's what the experts do.
Right, we won't be doing
super
that.
risky.
Absolutely not.
So you can leverage on a few different things, but the most common and what a lot of people do is take out a mortgage to buy a house because it is so expensive to buy it outright.
Did you find that episode?
It's Raising the Curve, episode 10, and it's what's better, investing in shares or the property market. And we touch on investing in both and things you need to be aware of, really.
Raising the Curve 85 as well, how Vic made $800,000 in 6 years, talking about your journey into property. I think have a look through some of our property episodes if this isn't something that you have explored before, because for me, getting my head around leverage was definitely a bit of a mind.
Especially if you're not a numbers person, it can be quite, it can be quite confusing, or you just might need it explained in a few different ways, which is absolutely fine. So yes, have a look at those, because it is a bit of a game changer, and why so many, particularly New Zealanders, are so obsessed with investing in property.
I think I only really understood the idea of like getting on the property ladder and how people are like, oh, you should get on as soon as possible, blah, blah, blah. I don't think that made much sense to me until I understood when you borrow money from the bank, you're magnifying your ability to either get more returns or potentially, be at even more of a loss, with the idea that the returns or the losses are compounding on a larger number, and you don't have to have that larger number. Sorry if this is sounding confusing for anyone listening, but
it's like if you invested $100 and you got a 10% return on that versus if you invested $1 million and got a 10% return on that.
Yes, thank you. That's way easier.
The percentage return is the same, but the amount you've invested is a lot bigger. So therefore, say that was $100 of your own money, but then it was $1 million and half of that you'd borrowed from the bank and half you'd actually made yourself, you've still been able to invest a larger dollar amount.
And the point is that you don't have to give the bank any of your returns. So say that example of $1 million, or, say you only borrowed $500,000 from the bank, you only have to give $500,000 back to the bank.
Yes.
So it's,
Their payment is the interest you pay on that $500,000. It's not the gain that you make and the price of the house. So your thank you for letting me borrow that money is the 7% mortgage rates we're paying at the moment. So
is it still 7%?
Yeah. So they don't double dip and go, hey, can you pay me 7% and can I get a bit of the increase in price of your house? Thank you. No, they don't do that. Thank goodness. But yes. So this is a very relevant podcast, I hope, for a lot of people about, whether you should be investing or paying off your mortgage. And it's also really helpful if you are sitting there and you're like, cool, I'm actually going to go for a pay rise this year. I'm going to ask for an increase in my salary, or you get a bonus, or you get a tax back or something. It will be super relevant because it's like, okay, do I put that big chunk of money into paying off my mortgage or investing? Because a lot of people have asked that as well. So, but to summarize the episode at the very beginning of the episode.
Was that a good idea?
No, I don't. Should we just drag it out to the very last minute? We'll make this a 4-hour episode.
I mean, we have been talking for ages and we haven't even really explained anything, so maybe
and
we
that's
should.
a wrap. Thanks, everyone.
Part 2 coming next week.
But investing your money only really makes sense if you can earn more on your investments after tax than your mortgage rate. So if your mortgage rate is 7%, and you reckon you can earn more on your investments, then it makes sense to invest that money because you're making a higher return on it.
Can we break that down?
With that,
no, wait, hold on. Before we move on to the caveat though, can you maybe give me a diagram or a really little numbered example? Because if you're walking or you're doing something, I think it might need to be, for me, I'm sitting here staring at you and I'm still like.
The thing with investing is there is no real guaranteed return, whereas what you pay at a mortgage rate is pretty guaranteed. If your interest rate is that you're paying is 7%, whether it's fixed or floating, which we can get into as well, but usually the bank will be like, okay, for a set period of time, you have to pay 7% per year, which is a set dollar amount that comes out each month that you have to pay. The bit where it gets tricky is that when you invest, there's no guarantee, particularly if you invest in stocks. We say on average you can get 10% return per year over the long term, but that could be negative 2% one year. It could be positive 15% one year. So that's where it's hard to give a definitive answer of what's best.
Because on one side you have a fixed amount that you can be like, well, you know that you're going to be saving X amount by paying off whatever.
Yeah.
But the stock market is
up and down, up and down. Yeah. So that's where it gets tricky. So some people might be like, you know what, I'm willing to take the risk and invest that extra money and invest it for the long term where I know that the return will most likely be about 10%. Whereas other people might be like, you know what, I don't think I can get that for whatever reason. They might be, they might be a bit older. They don't want to take that risk. They might be like, you know what, I'd rather just the certainty of paying off my mortgage. And also I might just hate debt. Like I'm quite debt averse. I would rather,
I guess is it also, so say mortgage rates are 7% and say, so how would you then figure out, so say you owed $100,000, you would figure out what 7% of that, which is $7,000. Is that right? 7,000 of that? I think that's right. Then would that be, would you then be figuring out, okay, so if I was to then invest that 7,000 over a year, what could I be making on that? And is it more than what I'd be paying off? Is that right?
It's kind of get rid of the dollar amounts. I think that it's more the percentages, if that makes sense. Maybe let's go back to maybe a few years ago when the bank's interest rates and mortgage rates were like 2 to 3%. It was a kind of a no-brainer then to invest your money.
Stock market.
Yeah, because you're like, look, the stock market, even if it gets 6% on average, is better than, I can invest in some pretty low risk things and still get a better return than I can in my mortgage. There's probably people listening that are like, but actually, so the flip side of that is if you are early on in your mortgage, say you've just bought your first house and your mortgage is quite high because you haven't had years to pay it off. So, usually over time you start with a higher mortgage and you pay it off over the years. So the dollar amount of your mortgage is quite high.
Oh, so 2% is actually quite a large number at that point.
Yes, yes, exactly. But also the size of your mortgage is quite a large number. So you're best to pay it off as quickly as possible.
Okay.
Because if interest rates do start going up and you've managed to pay down
more interest on it. Yeah, okay,
and you've managed to pay down a lot. So there's that comes into it too. So there's what return you think you can get, but also how early on you are in your mortgage. So therefore, what size is your mortgage? If it's massive, if you're at the tail end and you're like, you know what?
No one's at the tail end.
7% and I've only got $50,000 left on mortgage.
Imagine. Oh my God.
Well, that's the dream. That's why banks lend you the money.
Does anyone pay their mortgage off by the time they die? Like, honestly, there can't be that many people that are mortgage free.
Yeah, well, I mean, this is another thing is that most people that do pay off their mortgage, then they're like, cool, now I can borrow more. It's like this cycle because you're like, well.
How? What?
Well, you've paid it off.
Yeah.
And you've still got the asset. You've still got your house, which is worth, say, now you've got $1 million mortgage-free house. You can go to the bank and say, hey, can I borrow $500,000 and buy another house?
So this is the ladder thing.
This is the whole, so.
It's like, people with money get richer. Or like it's the idea that.
Money makes money, or whatever that saying is, yeah. But
I really want to own something, Vic. I don't want to just have a tent.
Channel this. Remember this. Remember this when you're sitting there bogged down in paperwork because it is time consuming. But I can't even remember that time in my life now. Yes, it seemed overwhelming, confusing at the time, just like it does now, sorting out my bloody tax. But I'm like, you know what? I'm going to be better for it.
Oh, yeah, the tax.
Let's
Holy
not,
fuck.
Let's not say the T word.
Yeah, no. Shit. Anyway, okay, so that's actually a good idea though. Like when you start to be like, I don't want to learn about investing. This is boring, or this is overwhelming, or I don't want to do my paperwork. Whatever it is, visualizations, mantras, whatever you need, like something to get you through the bogged downness. Because the reality is it is hard and it's also work. It's not just like.
Don't be afraid of if you're talking to an expert, be like, sorry, can you explain it in a different way? Or sorry, I still don't get it. Because for them, they talk about this stuff all the time. They're talking in tax speak. They're talking in mortgage speak. You don't. And if you don't understand, then you're not going to enjoy the process. You're not going to learn. You're going to come out feeling probably confused and overwhelmed. And you want to feel that sense of empowerment of understanding and being like, oh my God, I get it. And so just ask for explanations in different ways because they should be able to.
This morning when I had that meeting with this mortgage broker, quite good timing, by the way, having this record today.
Yeah.
He'd emailed me being like, hello, you still have not filled out your forms. And I was like, oh my God, I hate forms so much, like actually the bane of my life. And I actually emailed him back and I said, I'm really bad with paperwork. Like this is something I struggle with massively. I'm actually neurodiverse. Do you reckon is there any other way that I could do this? Or like, is there any extra help or something? And I've never done that before. I never was like, hey, actually the way that you do this isn't working for me. Like, anyway, he replied, he was like, totally happy to run you through this, like put some time in my calendar or whatever. And the first thing he said to me on the call was like, I was kind of feeling a bit embarrassed. I was like, oh, sorry for this. Like, I know you probably don't have to like put that. And he was like, oh no, actually I've also got ADHD. Totally get it. Like not an issue at all. Like I'm really happy to go through with you. And it was one of those moments where I thought like, just what you're saying, if you don't understand something, there'll be millions of other people who feel exactly the same. So don't feel like you can't ask the question because you're going to stay in the dark even longer. And if you want to do something, i.e. buy a house, but you feel like there's a big roadblock, I think it's important to know that you can ask questions. That's why we even started the curve. And I hope that people that listen have started to do that more. And I think they have.
And I actually get quite fucked off when I'm talking to someone and they're just verbal diarrheaing some jargon that to sound smart themselves. And I'm just like, sorry, I don't understand, or can you explain? And they're
I love
and they're just like,
that.
oh, you know, they're kind, and I'm like, well, I'm sorry if I'm not understanding, I'm not going to be a client of yours. You know, like it's just kind of, if you don't have the time of day to explain something to me so that I can understand, I don't want to be a part of this relationship, whatever kind of dynamic it is.
What's a word that's like orthogonally or something? It's like, sorry, there is a point to this.
Did you just disappear for a minute?
Yeah, sort of. Someone taught me a word the other day. It was to do with, they used it to describe a garden. And I remember being like, you should ask what that is because that's a really cool word, which now I've obviously forgotten. But it's kind of the same thing. Like, you're not going to learn unless you ask someone again. If they're saying something that makes no sense, whether it's like a cool word that you want to learn or you don't understand what they're talking about, you never learn if you don't ask questions.
Yeah.
And so it's quite funny that you've noticed that in terms of the way people speak.
Yeah.
But I really want to remember what that word was. It was really cool.
But yes,
Sorry,
so
irrelevant.
now, so when I do say it's personal preference, it very much is, unfortunately, because everyone will be at different stages in terms of their mortgages, how long they've had it, what the size of their mortgage is. And so you have to realize, you know, would you be comfortable with the ups and downs of the, oh my God, just lost my train of thought. Been recording for 40 minutes and we haven't even got to the fucking juice of this podcast.
I just saw Vic's sunglasses in her bag. They're fucking cool. And I just thought I'm just going to wear them while we record for a little minute. Sorry, continue.
Yes. So,
and when you say it's someone's like,
are you like, you know what, I'm going to take the risk. I'm going to invest in the stock market because I don't really care and I'm risk averse and I can weather the ups and downs and
But I think you need to explain the risk side because someone might be listening to this and don't really understand what risk means. And risk, for anyone that knows, like for anyone that doesn't know, risk basically means that
the movement up and down.
Because the stock market is not guaranteed. So you might put $5,000 in the stock market. That money 1 year might be down 5%, it might be up 50%. Mm-hmm. If you need it in the short term, i.e. maybe 6 months, a year, 2 years, whatever, and you have to pull it out when it's down, that's where the risk is. That's the scary part because you could potentially lose it if you need that money and you have to take it out at a point in time when the stock market is not doing well.
Yeah.
And that's kind of what Vic means when she says, if you're willing to take the risk, it's like if you don't need that money and you're pretty confident that, say you've got a 5% interest rate and you're like, well, you know what, I know that on average over 10 years, the stock market is probably most likely going to deliver at least double and I'm happy to put my money there and not worry about it for a long time, then you're comfortable with that risk. Yeah. That's what she means.
Yeah. And then there might be people that are also in the camp of like, you know what, I just want the peace of mind of being mortgage free. That has been my goal. You know, that was what my parents instilled in me is to, you know, you should be paying off your mortgage. That's, you know, first and foremost. And then you should start thinking investing. And that's fine as well. You're still earning effectively that 7% or whatever you're paying on your mortgage because you're paying it off. So you're effectively, because you're paying off your mortgage, you're effectively earning that interest rate as well, if that makes sense.
I think the reason people ask this question a lot actually, Vic, is because they just want the best return. They want to use their money in the best possible way. But I think what people don't realize is that with using your money in the best possible way, i.e. probably being a little bit riskier, that's where you're going to get a little bit more reward potentially. Yeah. But then you need to understand that you are taking a risk. I think most people say, what's the best thing? Should I do this or should I do that? It's like, well, if your mortgage, your interest rate is lower than what the stock market is returning on average, then surely the stock market makes more sense, right?
Yeah. But if you're going to be stressing about it every night and you're not going to be able to sleep, then that's not the best outcome. I love before we even started this podcast, she's like, oh, I don't even know I need my laptop because, you know, I don't have any notes on this. But I love how I love that you just swan in and it's great. It's great energy.
Sorry, is this distracting?
No, it's good.
I feel a bit drunk actually. I'm not sure why.
I feel like you are.
Yeah, I don't know. I think it's because I took that ADHD medication for the first time. No, not the first time, maybe the third time. And you're not meant to have coffee with it. So I think I'm like kind of on one right now.
Well, I think we're great.
But I'm loving this
I'm on
episode.
Tramadol. You're on ADH. Yeah. Sorry.
You want Tramadol? Holy shit.
And coffee. So I'm kind of a bit counteracting.
Have we explained anything that was in your notes that you wanted to talk about today?
We're getting there.
Yeah.
Yeah, we're slowly getting there. But yes. So I feel like we're jumping all over the show. But anyway, we spoke earlier about that if you're in the early years of your mortgage, how you should be paying down. You should be prioritizing paying off your mortgage. Even if you think you can kind of get more in your investments, maybe you should be more in the camp of paying off more of your mortgage. So because if you have a $900,000 mortgage and interest rates are at 7% at the moment in New Zealand, you're paying $63,000 in just interest.
Oh my God.
So you're paying that a year in just interest. So the quicker you can pay down that $900,000, the better. Because if you paid that off really quickly and say you got a bonus, say you got a pay rise, say you got a tax back, inheritance, whatever, and you're like, I'm going to put that straight onto my mortgage, and you got that down to $100,000, when interest rates are 7% like they are today, you're only paying $7,000 in interest. So that's why people say, and that's why I find the older generation sometimes is like the quicker you can pay off your mortgage, the better, because you're paying $63,000 in interest versus $7,000. That's a huge difference. And that's not even paying off the actual lump sum of your mortgage. That's just the interest. Does that make sense? So I'm currently on interest only because I can't afford to pay off principal at the moment.
And principal is like the actual
loan
mortgage.
amount. Yeah.
You're just
so
paying interest.
If you have $1 million mortgage, that's the principal. The interest is is the percentage that you pay on that $1 million. So when you take out a mortgage, when you start paying it off, you have to pay a portion of principal and a portion of interest. Mm-hmm. In the early stages of your mortgage, the majority of that payment
is interest.
Is interest, yeah. And you're paying a small bit of principal. As the size of your loan gets smaller, that kind of dynamic changes to the majority being principal and the smaller amount being interest.
So would a rule of thumb be maybe focus on your interest first to pay things down, and then you could look at the stock market? Would that kind of be like a general? Yeah.
So that's why it depends, firstly, what size of your mortgage or how early on you are in your mortgage journey.
You might also want to focus on your house if you've just bought it, right? Like
totally.
If you go and buy a house and you're like, holy, I've got a whole $1 million of debt, but you're not even contributing to try and pay it off. Psychologically, that might not be great for you.
Yeah.
To then be investing elsewhere.
It scared the bejesus out of me. Yeah.
Being in debt that much. I was just like, oh my God. And I kept having to think, I've got an asset. It's worth multiple times more than that. But just opening your bank statement and seeing a negative value. Oh my God, I can't even imagine.
That amount.
So wait, is it in your bank? Does it say that when you go in, it's like negative?
I've got a separate bank account, so I don't see it every day. But
that would just absolutely do my head in.
Yeah, which is quite good sometimes if you want a reminder of, shit, I need to pay off my mortgage.
But do you, or are you constantly worried about it anyway? I think I mean,
you're pretty well aware. The bank doesn't really let you forget that you've got a mortgage. So if we look at paying off your mortgage, I guess the psychological aspect of this is just like how liberating it can be. Imagine being debt free and you own this $1 million asset. And then if you sold that, you get that full $1 million back into, like how liberating.
Oh my God, is that how it works?
Yeah. And then whatever you put towards paying off your mortgage, you've now got as free income. So the quicker you pay off your mortgage, the more you've got as disposable income. So if you're paying off, say, $5,000 a month on your mortgage, and then you're like, the bank's like, hey, congrats, you've paid your mortgage off. You've now got to spare $5,000 every month that you can hopefully invest. But some people might just be like, you know what? I've been so strict on myself, I'm going to go spend a little bit, which is absolutely fine. But so it can be quite liberating to have all this disposable income, which is why people try and do it before they retire, because then you've got that spare disposable income to spend on other things.
What I kind of don't get is why you spend your whole life paying off a house to only then use that money later in life. Like what you're kind of saying in terms of, say you were mortgage free and you got to 75 and then you were like, cool, I'm going to live off the house or whatever people say.
Yeah.
What does that mean? Are you
Well, it's if you didn't own your own house, you'd have to pay rent.
Yes.
So you'd have to pay rent out of your pension or out of your retirement.
So it's just the fact that you're not having to pay rent, therefore, okay.
Yeah.
So you're not actually technically living out of the house in terms of you're not getting money from that asset. It's just if you sold it, you would get money.
Yes, yeah. Okay. So you could sell it and downsize.
Yeah.
And therefore you might have a couple of $100,000 that you could
Casual.
put in the bank and live off the interest. So there's lots of options when you've got a large asset that you own yourself that the bank doesn't own part of. That makes sense. So, yes.
But hold on, for the bank to then not own it, you would have to sell the house.
No, you've just paid off the mortgage. So as soon as the mortgage is paid
you're
off,
paying the bank back
Yeah,
as it.
yeah.
Sorry, this
Yeah,
is
yeah.
sorry. It must be so annoying for people listening.
No.
But it's just because I've never had a loan like that. So I don't.
So the bank would own, say the house price didn't change at all, and you borrowed 50% as a mortgage, and you'd pay that off. Then eventually the bank would own 40%, then 30%, then 10%, then 0%.
And then you own the whole thing because you paid them back.
Yeah.
Oh yeah, okay.
Yeah.
So
And
like
so
they're
you
like the
could do-
trustee parent that you're borrowing from.
They're
basically.
literally like the parent that you're borrowing from. Yeah. Going.
And you're like, here we go.
Yeah.
There you go, mom. There you go, dad.
I'm paying you back every
Yeah,
month.
yeah. Okay, yeah, got it.
Yeah. So yes, there's some things to consider though. If you are in the camp of like, I'm just wanting to pay off my mortgage, I want to be mortgage free. I mean, you never really hear anyone being like, oh my gosh, I wish I hadn't paid off my mortgage so soon. You know, like people are pretty stoked once they do. Is that a large portion of your wealth will be tied up in your house.
Yes, and that's not liquid because you can't use the money, which
exactly.
we just spoke about.
And it, like you said, you don't get income from it. So yes, you might have disposable income because you don't have to pay your mortgage anymore.
But okay.
But it's not like an investment where you can generate.
Unless you rent it out or something.
Yeah, if you rented it out, you could rent out a room. Yeah, you could do that. But so you'd be kind of what we call asset rich, but cash poor. So you would have a lot of assets, but
That could be quite a good like tote bag slogan.
yeah,
Something along the lines of
it's like we played
got a big asset.
yeah. Check out my assets.
But like a really empty wallet.
We played a lot of Monopoly Deal over summer.
Fun. It's such a fun
such
game.
a good game. And yeah, a lot of the time I was asset rich but cash poor. I had a lot of properties but no cash. So therefore when I needed to pay people, I had to pay them in property. I had to sell my properties.
Oh my God, that's
Yeah.
such, I know that's so
Yeah.
simple, but that's a really good analogy.
Because I had no cash in the bank. I was like, oh my God, I'm going to have to sell my house to pay you. And it's kind of exactly the same. If you have no disposable income, yeah, you can't.
I guess also another risk element with property is if you do have to sell because you need the money and the property market is shitting itself, then you also might not get what you really should be from a value perspective.
Yeah, and it's costly and it takes time. You can't be like, oh, here, have a few bricks for the groceries.
Yeah.
You know, it's very much like big
Locked
ticket.
and loaded.
Yeah. So, it can take a while to sell and you can't access your wealth as easily as you can with investments. Not that we condone that, not that we suggest that.
No, don't do it. Trust me. Take it from someone
Do
that had
not
to pull
do
it
it.
all out. So stressful.
Yes. So,
Oh my God, side note, but can I just tell you? So the last time that I checked my KiwiSaver, I had, I think it was like 46,000 or something, or maybe it was 48. Anyway, now it's 56 something.
Oh.
And this was not long ago.
Yeah.
Remember we were in London and we checked it. It's
Yeah.
so much more because I was looking at my numbers this morning with the mortgage broker and I thought, holy shit. I logged in and I was like, I actually think that's way more than what I had. And then I looked at the numbers and it was. It's such a good feeling.
yeah, no, it's great. Yeah. I love it.
So good. I didn't even have to do anything. It was just sitting there.
It doesn't happen all the time. There will be times when you check and it will go down, but yes, majority.
You could just be positive for 1 second, you know?
I know. Sorry, I'm just being a realist.
I know.
Yeah.
I reckon we
anyway.
might have to come back to this and do part 2.
Yes,
honestly.
I've got a little summary of pros and cons, or maybe
Okay.
I'll, just dangle the carrot and be like, listen to the next episode to see the pros and cons.
Yeah, I think that's a good idea. It's a real tactic, Vic.
Yeah. But one thing just to wrap this up is if you're deciding that, you know what, I want to pay off my mortgage and you're in that camp, one thing to be wary of is lifestyle creep. And we've kind of spoken about this, is that if you start paying down your mortgage and you're like, oh, cool, I've paid off some of my mortgage. And then you're like, well, I can borrow more now. And then you borrow it again and you're kind of back to square one. So
Isn't that what so many people do?
But they
though?
do that. It depends what you're borrowing it for. You can borrow it to renovate. You can borrow it to buy another house. Yes, that's great. But if your prime focus is to pay off your mortgage, you're not going to get there if you keep borrowing money. As long as you're borrowing more money to invest in something that's going to generate you a good return again. You're
Isn't
not
that
just
what most people do though?
Yeah, but you can invest in bad properties. You can invest in properties that don't do well, or you can borrow. You could borrow money into your house to
Go on holiday.
Well,
Could you?
I mean,
hypothetically.
you could lie to the bank if you wanted. But yes.
Imagine how gutted you'd be if you spent it on like a European holiday.
Yeah.
And then you had to pay it back and you didn't have any kind of anything that was appreciating in value.
And as some people do, like I could be like, you know what? Let's borrow against my house and invest in the curve. And then the curve,
let's do it.
No. And then the curve goes tits up. And then I'm stuck with the mortgage. You know, there are stories where I've heard friends, parents, and they have paid off their mortgage and they've married someone else, and then their partner is like, hey, let's start a business and let's take a loan against your house. Business doesn't do well. They fuck off. And then
That
they're
happened
left
to
with
my mum.
Yeah. So I think it's like, I've heard so many stories like that. So it's just, once you pay off your mortgage, it does give you a lot of flexibility, but don't carry it away. Yeah, just be careful, because that's a huge effort and a huge sacrifice you've made, and you should be so proud of yourself for getting there to pay off your mortgage and have this amazing asset. Don't then go F it up. Just be a bit wise.
Before we finish this podcast, I have to apologise to you and Miso. She was incredibly well behaved. Well done, Miso. Good girl. Come here.
Girl.
Come
yes.
here. She's been so good.
So yes.
So we'll do part 2 of this.
We'll do part 2.